Happy Thursday, everyone. Welcome to TheStreet Live. I'm Jeff Marks, Senior Portfolio Analyst at Action Alerts Plus, standing live on the floor of the New York Stock Exchange with Jim Cramer. Jim, we had a nice day in the markets yesterday, but we are seeing some red today, especially after that PPI number.
Yeah,
what are you looking at right now?
That number signals rates go higher. I think that the Fed is beginning to really signal, listen, we're going to stop, we're going to taper. What's very interesting is that these low multiple stocks are on fire. And the high multiple stocks, no matter what they do, I have, for instance, a terrific company, Bumble, on tonight, but it's regarded as a high multiple stock and it can't get any traction after a very, very good quarter. So I think that we always run a balanced portfolio, but be aware that the high multiple stocks are under pressure. It's not your fault, it's not their fault, it's the fault of rates.
So that PPI number, it increased 1% in July. Estimates were looking for a 0.6% increase, and that comes yesterday after CPI was better than feared.
Yes.
So you called out how we always keep a balance of stocks. So are you still promoting that barbell approach, having some secular winners, having the industrials that do benefit from some inflation in the economy?
We own Wells Fargo and Morgan Stanley, but we also own MasterCard and PayPal. That's the barbell writ large, okay? We do not have that many low multiple techs. But low multiple tech usually means slow tech, and I'm not in favor of those.
All right, now, Jim, we did get some big news yesterday. The FDA is reportedly looking to approve a third vaccine shot from Pfizer or Moderna for the immunocompromised. How big is this for Moderna and Pfizer for their revenue streams and just the battle against COVID in general?
I think Pfizer's big, but I think what it really says is maybe you should be looking at REGENERON. REGENERON has the best monoclonal antibody. Now, what is that? When you get it, if you get it, they need you out of the hospital quickly. We all know that in Louisiana and in Texas, Florida, they've got a real problem. They got to get people out of the hospital. So what they've done is they've ordered a ton of these monoclonal antibodies. So that's going to boost Regeneron's quarter.
All right, now I want to turn back to stocks. And yesterday you mentioned on Mad Money how there's a lot of bargains out there. And
Yes.
I guess a question that I have for you is how do you distinguish the difference between a stock that may look overvalued or something that is just simply too good to pass up?
Well, I mean, let's take a current example. Let's take American Eagle Outfitters. Matt Boss loves it because it's had 17 straight quarters of fantastic numbers. Wedbush downgrades it today, saying it's too expensive. Now, that stock hasn't done anything in the last few weeks, but it's up a lot for the year. What I like to look at is I like to extrapolate and say, well, wait a second. If you have really good management and at the same time you've got a cyclical win, which is this childhood credit, and then a secular gain, which is what we're going to get from denim, then you shouldn't leave it. Wedbush seems to think that that's not enough to keep it. I think you have to have several themes to keep things going right here. Walmart's classic example was lower multiple versus historic, and it also has the child tax credit. So Walmart has been a big win. So you have to go case by case, but you want two sources. You want two tailwinds in this market, not one. If it only has one tailwind, it's not going to work.
All right, we're going to talk about back to school later on this program, and we're going to talk more about that downgrade on our Action Alerts Plus video immediately after this. But before we do, let's talk about another interview that you had on Mad Money last night, Norwegian Cruise Lines with CEO Frank Del Rio, and he was very vocal about how poor the leadership has been with the vaccine mandates. So, look, Jim, you've been a big proponent of how business can be a force of social change, but what about business as a source of public health?
Yeah, well, the lawsuit that he brought against the Florida healthcare, but of course DeSantis, the governor, was largely about the idea that there is a larger cause than just the idea that the vaccinated, no one should be discriminated against if they're not vaccinated. And what he was saying is, look, there's a kind of a greater good here. People want to go on a cruise line that everybody's vaccinated. He wants to be able to go to all the cities that require it because there's a lot of destinations that he won't be able to go to, which interrupts his commerce, so there's a violation of the Commerce Clause. And he's basically saying, and the judge is agreeing, that there can't be protection in the law for the people who are not vaccinated. So in other words, they're not a special class. I mean, for instance, I'll give you an example. I'm 66. I'm part of a protected class. I'm a senior. Minorities are often part of protected class when it comes to 14th Amendment. You want to find if you haven't gotten a vaccine and you don't want it, the justice is saying, listen, you're not protected. We're not going to protect you. So that's that greater good theory. Now, it ended up being a decision based on free speech and the right to be able to do what Frank wanted, and also on a preemption of the Commerce Clause, that you can't preempt the Commerce Clause. But the subtext of it is basically that Frank is right, that we should be worried about the public health, and that it's reckless not to be. And that's why I'm hoping that the decision that I thought that others would use that decision to say, you know what, we're going to insist on that. But only United did, but the other airlines were cowardly. I listened to Eric Repair today, and he was saying, the great chef at Le Bernardin, he's now requiring vaccines. And initially there was great blowback, but now, of course, another whole cohort has surfaced to say, that's where I want to go. That's safe. So be aware that the initial people are angry, but then there's just a solid group of people who say, you know what? I don't want to get this thing, and I want to eat and be merry and enjoy with people who are similar to I am, people who are vaccinated.
Yeah, well, I completely agree with that. Jim, next up, we got to talk about semis. Micron has just been acting very poorly the last couple of days, and it's really falling apart today after Morgan Stanley downgraded from overweight to equal weight. They referenced Game of Thrones. They said winter is coming. We're entering a late cycle with supply catching up to demand. So, Jim, what do you think about the semis here, Micron? It's important to also distinguish Micron from some of the other semiconductor players.
Micron is less cyclical because they put a lot of technology in, but it doesn't matter. The market is not going to say this time is different. It never does. DRAMs are supply and demand. When there's an oversupply, the price is radically cut, and therefore the stock goes down regardless of how low the multiple looks. So you can't really touch it for a while. But what can you touch off of it? Cisco and Apple. They are giant buyers of DRAM, and this is going to help their gross margins tremendously.
So when they talk about those two companies, the impact of rising input costs, that's actually a headwind that could flip to a tailwind, is what you're saying.
No, and Cisco in particular has had some problems getting inexpensive DRAMs. Now, who else? If you can't really extract, most of the companies have many more things going for them. And, Analog Devices is a very good company, and people are selling that off this Micron call. I think that's a mistake, but they're going to do that. I would emphasize that NVIDIA and Marvell have nothing to do with this whatsoever. Nor does Qualcomm, and I think that those are buys on weakness.
Yeah, and Cisco reports next week, so we'll definitely hear more from them next week. Jim?
Unfortunately, the weakness, it'll be too soon for Chuck. Unless Chuck gets a lot of questions, Chuck Robbins, CEO, this quarter is still going to be one that's marred by DRAM prices.
Got it. All right, Jim, you got a couple big interviews tonight. The one I'm looking forward to the most, I must say, is Bob Chapek at Disney. They report after the bell tonight. What do you think about Disney?
Well, I said that we did sell it. I was concerned about. I was very concerned about Delta. I was very concerned about the way. Let's put it this way: that there was so much emphasis on Disney Plus, not enough emphasis on the parks in the conference call. I think the conference call is going to be much better. I think Chapek's got more seasoned. I expect actually good things.
Yeah, it will be interesting to see how Disney's parks are doing. Where we know Orlando right now is a big hotspot of COVID.
Yes, and I think that's worrisome. But he's instituted a policy where the people who work there will be terminated in 60 days if they do not get vaccinated. I think that's very courageous because he is in Florida, where once again the governor's really against that stance. But I think that what can I say? That's a very powerful company. Oh, by the way, I just wanted, for those of you who are totally into specs, the best of the companies that has reported so far is a company called Doximity. And I want you to look at that one, symbol DOCS. My wife was what's known as a detail person. She used to go and try to get doctors to buy things. The way to reach doctors these days is through the site Doximity. and the quarter was what we call rule of 40. This was the rule of 140. It had 100% growth and expanding gross margins. So those who want to have really, really good spec is that. And the second great spec is Upstart, another one that had an unbelievable quarter. So I just like to periodically say, hey, listen, these are the great specs and those are the best specs.
Yeah, and Rule of 40 is one of the ways that a lot of investors like to value software as a service companies. Now, Jim, you mentioned American Eagle Outfitters earlier. They were one of the 4 stocks that you mentioned as a potential back-to-school winner last month. It was Dick's Sporting Goods, American Eagle Outfitters, Levi's, and also Simon Property Group. So what do we think about this group as we are heading into that back-to-school shopping season? And we also have a lot of mandates right now with masking that could be a potential problem as kids return back to school in the fall.
Yeah, I mean, I think that shopping is back and back big, even with this. Remember, there's a considerable number of people who simply aren't scared. And they're brave or they're foolish, but there's no diminution of shopping. Simon Properties has told you that. Now, we do know credit card receipts are not good for travel, for airline, but they're still good for shopping.
Yeah, and we got a little bit of that when we heard from Southwest yesterday. Now, Jim, we mentioned Cisco reports next week. We got a lot of other big earnings reports, too, to look forward to. Walmart, Target, Lowe's, NVIDIA as well. What are you looking towards next week?
I think that Walmart will be the test because Walmart's moved from 139 to 150 very quickly. A lot of it is, if you remember, we did multiple videos where we said, here's why I don't want to sell Walmart. I think it could be up. It could be in a flash, it could go up 10. Well, we just had the flash. So the question is, did it steal from the quarter? And I don't know the answer, but I am concerned about that. Debated selling some at 150, but feel at 150 it's still cheaper than the others.
All right, that's the show for the rest of the week. I'm Jeff Marks. We'll see you Monday.